right, getting close to the start time. I want to ask a question of the folks that are logged in so far. Just let me know if you're familiar with trading options, if you have trade options or do trade options, and understand how to trade, puts and calls and spreads and things like that. If you do, please type a yes in there, and if a no, type an N, just so I have a little bit of a feel for the what folks are familiar with and how they trade. It's actually pretty well split. So a lot of people do, and some people do not, and that's fine. The service and the software will take care of that and help you become excellent options traders. But we'll talk a little bit about options at the beginning. So we're about ready to start here. It's coming up on 1 o'clock Eastern time, and got a lot of folks still coming in. But I'm gonna go ahead and get started, and if people can join, we won't get into the meat of the presentation for a few minutes, so that'll give some of the folks some time to log in. So again, this is Dave with the Compass Options Trading Room and Alert Service, and we're going to cover the service, the alert service, and also we're going to cover the software that I use to find these trades to send to the alert service. I think that's I try to be transparent, and I think a lot of people who are on alert services would like to know how these stocks that they get in their alerts are where they're coming from. How do we know that they're good trades? So we'll go into that as we go along. So first thing I need to do, of course, is get this disclaimer out of the way. And so all signals and trading opportunities we provide are for educational and demonstration purposes only. Trading is very risky, as we all should know, and you should never risk more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Before I get into this part of the presentation here, I get a lot of, usually I don't talk about my experience and how I got into trading and how long I've been trading and all that. I've been a professional trader for 14 years, trading options and stock, but mostly options. And a lot of people ask me how I happened, how did I get into this? And I used to invest way back, just buying stocks and writing covered calls. But the interesting thing is that once I started trading, intraday trading and short-term swing trading, I was working in IT. I was a systems engineer, and I did quite a bit of work with a company that we did a lot of cloud services for. And I was about 14 years ago, in this coming December, actually the company ran into some hard times, and I got laid off for right around Christmas time, about 2 weeks before Christmas. So I just started trading full time. I mean, that's what I was doing part time anyway, so I figured I would just trade till I see what happened. My boss told me we'd likely be able to call me back in a month or two. So it's funny because I started trading. That was end of December. Not exactly the greatest time to be trading around Christmas time. But then I traded in January, and in about mid-February, my ex-boss called me back and said, things have turned around, and you can come on back and start. You can go ahead and start this coming Monday. And I told them what I've been doing, and I had been trading full time. And I told them, I honestly can't afford to come back to work for you. I enjoyed working there, but I just can't afford to come back and work. I'm working from home, just trading and doing much better than I did with there. So that's how I get started. Full time. It was really kind of, I don't know that I would have switched to full time on my own right then. It's always a kind of a shock to go from a part-time trader and then to go to full-time trader, but that's how I get started in this business, and that was about 14 years ago, and I've been doing it full-time ever since. So anyway, that's kind of my quick story. So we want to talk a little bit about the market and what drives the market, because it's really important to, when you're a trader, you really need to be following the money. Everybody says you got to follow the big money, follow the institutions. So how do we do that? So the market consists of many small retail traders like myself and most likely everybody here. So these little marbles here are the retail traders, such as us, and we as retail traders, and these should be much smaller. We don't have any ability to move the market. We don't set trends. We can't push stocks up or down in any particular direction for any particular period of time. We're just in there fighting against other retail traders. And when only the retail traders are trading, when the institutions aren't in there, what you get is you get a lot of chop and you get a lot of chaos. You're not getting any kind of a trend to follow. Now, when the institutions, and this big marble is the institutions, this is where what you call the big money or the institutional money. And these are the hedge funds. These are Goldman Sachs. This JP Morgan. Would be all the 401ks that are out there, the huge pension funds. We're talking about billions and billions and billions of dollars that they've got that they can put in the market. When the institutions decide they want to go long a stock or go short a stock, then that's what's going to move it. And that's what we want to try to identify. What we want to try to identify is when the institutions are in a trade and when they're not. And we as retail traders cannot trade against the institutions. We want to trade with the institutions. So once we know that they're in a trade, then that allows us to go ahead and basically just ride up on their coattails and go in the same directions that they're going. So that's what the software does for us. It identifies when the institutions are in the trade and when they're not, and when the retail traders are only in there. We don't want to be part of that. So that's what moves the market. This is something that's really important to understand. You're never going to be able to beat institutions. They've got too much money, too much power, and they can direct the market any way they want to. And they're also made up of algos, by the way. A lot of most of the big institutional firms have algos, which are basically computer programs that trade automatically. They're auto traders, but they're looking for specific things, and there's a lot of them that have all different programs written to find specific things. But they can, interestingly enough, they can find things like things that they know retail traders take advantage of. For example, a divergence with MACD or MACD cross or an RSI or a Fibonacci level. They can identify all those things, and they can actually write programs to identify when that occurs, know when the retail traders are coming in, and then jump in there and basically destroy the retail traders, basically knock it against them and take advantage of that. And that's one of the things they do. And there's a lot of algos out there that will do lots of different things. They listen to the news optically and trade off of that. But just know that that's where most of the trading is coming from. Most of the trading, 85% is coming from institutional algos. All right, so we want to go over what the strategies that I use in the trading room, in our options room, and the alert service. When you get an alert, it's going to be coming with one of these type of trades. We use options. You don't have to use options. If you see a trade come through, for example, long Microsoft, and I'm buying calls on Microsoft, you can buy the stock. I mean, if we like it long, you certainly can buy the stock if you want to buy stock. But I use options because it leverages your money. I mean, you can obviously get a lot more bang for your buck on options than you can on the stocks. So most of the options alerts will be straight calls and straight puts. That's what most of them are going to be. And it depends on the market conditions, but mostly straight calls and straight puts. We do use debit spreads using weekly options expiration. And this is a strategy that I have a video on how to use this. And this is a very successful strategy when used correctly. And we go into a lot of detail in the room on how to use these things. But yesterday I did one on I can't remember, I think it was UNH. I did one on UNH. And the debit spread went up about 45% in about an hour and a half, which was pretty good. But so we do use debit spreads. We also use what's called time spreads over earnings. These are, you may know these if you know options, you may know these as calendar spreads. And the way we do this over earnings is we do the calendar spread to capture the volatility crush. So we're not trying to guess which way the stock is going to go on options. It's on earnings. That's a fool's errand to try to predict what the earnings is going to do. Even if you know what they're going to be, you're not going to be able to determine the direction of the stock or the magnitude of the move. But what time spreads do is they take advantage of what's called the implied volatility crush that occurs when earnings comes out. So we do a lot of those in earnings. We'll be starting to do a lot of these now in October, because October is when earnings start to come out again. And then I also have a strategy called a weekly ATM strategy. And this weekly ATM is we're using at the money puts, and we're selling at the money puts each week. We do it on a weekly basis. And then we also have a longer term dated put further out in time, 4 to 6 to 8 weeks out, that is a long put that we use for protection, and in case the stock goes against us, we can take advantage of that. So that's another strategy we use, which is a weekly ATM strategy. It's used in a neutral to bullish market. And then within the room, we have another system called the SPY Super System, and I'll show you some of those setups today. But we have a SPY Super System, and these are extremely high probability trades to catch SPY moves or the Qs, whichever particular index you like to trade. But these are very quick moves, so I can't alert on them. A lot of times they'll only last for 2 or 3 5-minute candles, and not practical to send out alerts, but we do call these out in the room when the situation arises. We actually had a SPY Super setup yesterday. All right, so those are the strategies. If you get the alerts, they'll be coming from one of these particular strategies. And I want to just go over a couple of things here. I use 2 pieces of software. I use this piece of software called the Compass system, and I use a piece of software called the Dominator system. The Compass system is the system I'm going to go into some detail on a little bit to show you what that does. This Compass system identifies when the institutions are in trades and when they're not. So I'm only trading anything I take. The institutions are going to be in there trading either long or short. So when the Dominator system came out, which was a year ago this coming October, what I did was I ran some tests on using the Compass system and then using the Compass and Dominator system combined. And I did it from last October 1st to 12/28. And all the trades I took, which were just Compass trades, in other words, they did not necessarily have a Dominator trade, which by the way is the market internals. It does not have a Dominator trade aligning with it. But anyway, the Compass trades that I took, I had 129 wins and 12 losses for that period of time, and that was a 90.2% win rate. Now, when the Dominator system came out in October, what I did was I just took trades that I would have taken anyway off the Compass system, and when the Dominator system then aligned, so let's say I had a bullish setup in the Compass system, telling me the institutions are in there buying, and the Dominator system was telling me they're also the market internals, which I'll go into some detail on, was also aligned in the same direction. They were both long. Then when I had that particular setup, both of those together, then we did 113 wins and 2 losses, 97.4% win rate. So this is an extraordinarily high probability setup when you get these. Now, they don't happen all the time. A lot of times the market internals or the Dominator will be pretty neutral during the day. But once you get it to either the bullish or bearish, and it agrees with the Compass system, this is what I got for win rate. This is very difficult to try to maintain this kind of a win rate. Even 90% is very difficult to do, but we do 85 to 92% consistently most months. Okay, so I'm going to go over some of the results that I've had with the system. I want you to see what it does produce, and then we're going to get into the details of the actual system. So just so you know what we're looking at, my best run of the year so far was the 29 wins we had from April through first part of May. And that particular set of wins, if you invested $2,000 in each trade, and that's an arbitrary number, but if you did invest $2,000 in each trade, it produced a little over $11,200 in profit. That was from April 20th to May 5th, 29 in a row. A really good run of trades. And this is some of the results, and some of these haven't really been updated recently, but I try to go into a little bit more detail here. The trading room from March through June, this is from March of this year through June of this year, And again, investing 2,000 in each trade, what I use for a baseline. We had in March 37 wins and 6 losses. So again, 86% win rate, nice profit, 8,900. April, 35 wins and 5 losses, 87.5% win rate here. 4740, not as much money as the previous month, but that's just, it's all dependent upon what kind of move you get in the options. In May, we had 41 wins and 6 losses, 87.5% win rate again, 7,600, and in June, 37 wins, 6 losses, 86% win rate, a little over 8,000. So the profits don't necessarily reflect the win rate, because obviously some of the options can go up a lot more than others, or not go up as much. But anyway, there's a $29,380 profit for $2,000 invested in those trades. And you can see we typically have somewhere in the 40 to 45 trades a month, basically that we trade. And we're very, very careful about what we're trading. We're only trying to trade the very best, highest probability trade setups. Okay, and I just put this in here. This is basically an Excel spreadsheet of those 19 wins that we had in April. And just so you can see that these are the tickers. You can see obviously the tickers here. If you see the number here, that means they were held overnight. But this is the percentage wins we had on each one of these. And again, you can see a lot of these were intraday trades in a lot of cases. So at 10, 15, 20%, 30% here. So running between a low of about 10% and a high of about 30, 35% is generally for intraday trades. Sometimes the overnight trades will produce a little bit more than that, but that's just so you can see what what you can expect basically on the trades we take, what you can expect for a percentage gain. I'm not trying to make anybody think that we're going to make 400, 500, 600% on every trade we take. It's not going to happen. That's people that tell you can take all these trades and like 500, 600, 1,000%. It's pie in the sky. And this is how you make consistent money. You grind it out every day on every trade and grab yourself 10, 20, 30, 40, 50% gain in a trade, and then move on to the next high probability trade. All right, so these are the specific trades in May. And again, I'm just showing you the results. I want you to see what we produce with the system. And didn't list every single trade here, but most of them to give you kind of a flavor. And you can see that we had 20, 30, 40%. We had a couple of loses. This was a news event. We were in the trade, and the news came out against us. Same thing with Alta. We had a bad news on that particular one. There's not much you can do about that. But again, you see, we do have losses. I want everybody to understand we do have losses. Anybody tells you they're never going to have any losses in the system, I would get away from there pretty quickly. So here's again, the win rates we talked about here. So that's May. These are the June trades. And again, you can see that we're very, very consistent in the profitabilities that we take. You're going to have smaller ones and larger ones, but we're very, very consistent. This was the call debit spread I mentioned to you that we do. This is a time spread that I mentioned that we do, 40% in GME, 45% in Broadcom, AVGO. So these are a fairly good cross section of the trades that we took and how much we made in those trades. So you can see we're not taking 5, 6 trades a day. We might take 3 on a very busy day. Some days we don't take any because we're only taking the very highest probability trade setups that we can find. If we can't find a high probability trade setup, we're not going to take a trade. Okay, and here's some July trades. Same kind of information here. We had this was a Meta we held overnight for 40%, UNH for 33%. So you see the percentage gains are very, very consistent. Generally you can figure you're going to get 20, 30, 35%. If we're intraday, we try to get 20 to 30% generally, and then take that risk off for the rest of the night. Okay, so that's again, that's just kind of an overview. It was July, 20 wins, 4 losses, 83% win rate. I didn't have as many trades that month. I was actually on vacation. I went to my wife and I went to Iceland for 8 days, so we weren't trading the first week of the month. And these are August trades. This was my worst month that I've had in a couple of years. Since I've started the service, we were down. We actually made money, but we only had a 72% win rate, which is really horrendous for myself and for this particular system. The room has been open since January 1st, 2022. We actually started the very first month of the bear market, and we have had, except for this month, we've had one losing month out of I guess that's about 20 months now. So 19-1, pretty good. I'll take that. I mean, you're going to occasionally have a losing month, but it's very, very rare. And we've only had one in the whole year and a half, or more than a year and a half now. And September so far, I'll show you the September trades. We're 17-0 that we're of closed trades so far this month. I started off pretty nicely, and I think if you've been trading, you know how difficult trading has been. This has been a very, very tough market. It looked like it was going to be bullish, and then it turned around. It looked like it would be bearish, and then it bounces, and it comes back down again. Really tough trading conditions. But 17-0 in September. These are our September trades so far. These are the actual trades we put out there, and how much we made on them. This was a spectacular trade. This is, I think, is the biggest, probably the biggest win I've had this year. Was STX. It was up 108%. We held it overnight, 2 nights. We held it 2 days, and we got a really big drop in it, and that was a big, big gain. But generally speaking, you can see 20, 40, 5% here, a small one, and in the 20s for most of our trades. But this is all of the trades. We had this Dollar Tree that we closed out on Thursday. We had D-Dog that we've had since the 19th. We closed that out on Thursday for a 22% gain. This Sell H was an intraday trade. So again, so far in September, if you've invested $2,000 in each of the trades that we took, you would have been up $8,460 so far on a $2,000 investment. I think that's pretty good. And these are, as I mentioned here, these are very, very difficult trading conditions. So that just kind of gives you an overview of what the system has done. These are just these trades here are these are specific trades that we send out on alerts. Because I said we don't send every trade out an alert, because if they're too quick, we can't do it. If we're going to be in it for a short period of time. But these are all the trades that we've sent out on alerts recently. Crowd was one, obviously. This STX we just talked about, that was in for 370 and out for 770 in 2 days. That was 108% profit. So here's the trades we've taken in the alert part of the alert service. We take all of these in the room, and then we take specific trades and alert them out if we think they're going to be long enough for the person on the alert service to be able to get in and get out in a reasonable period of time, so that I'm not sending an alert out and then 5 minutes later saying we're out of the trade. So that I only take them on to give you enough time to take advantage of the alerts. So these are the trades that we've alerted recently. Here's a few more of them. And again, I'm not going to go over every single one of them, but you can see that the profits are very, very consistent. That's the key here, is to know that these are the kind of profits you can expect in the trades that we take, whether it's intraday trades or whether it's a overnight trade or something we have to stay in for a week. And again, there are obviously going to be some losses as well. Okay, so let's talk about the alert service. I'm going to talk about the alert service. I'm going to talk about the software we use to find these trades, and then I'm going to go into some details of how the app software actually looks and how we find the trades. So this is the Compass Alert Service. It's an optional alert service. It's designed obviously for day trades and short-term swing trades. So for people who work, or they want to take some trading, but they can't obviously sit by the computer all day, this is perfect for them. It's designed for traders who can't watch the market all day, obviously. If you're looking for an investment, buy a stock and plan on holding it for 6 months or a year and a half, like an investment, you're not going to get any of those. We're not designed for long-term investments. This is a short-term trading method that we plan on that we use for intraday trades and short-term swing trades. Now, when we send the alerts out, these real-time alerts are going to be on the highest probability trade setups. We look at we have scanners, and we find the trades that we feel are the highest probability trade setups. Based on institutional involvement, market direction, market internals, all of those things. And when we find one that we feel like is extremely high probability, then we're going to go ahead and send that out on alert, and it'll come right to your cell phone. It comes on an SMS alert. And again, how do we find these high probability trades? Well, we identify institutional involvement, and I said several times now, we're looking for when are the institutions trading, when they're long the stock, when they're short the stock, or even more important, when the institutions aren't in a trade. When the institutions are not in a trade, we don't want to be in the trade. We only take them when the institutions are in there. And then we also look at the market internals and see if the market internals, which basically is showing us the number of stocks going up on upticks at up volume versus stocks going down on down ticks and down volumes. When the market internals also align with the institutions, then those are going to be the very highest probability trade setups. And then we do some additional technical analysis to find the best of the best. And if we don't have the market internals in our favor, by the way, but we have the institutions in there buying, and we've got high confidence in the trade, then we'll take those trades as well if the market internals are just neutral. So those are the trades that will come to you. The way they're going to come to you now, they're going to come on an SMS alert, and this is what we basically say in the room every day. We want to trade the best, and we just want to skip the rest. We don't want to be trading anything. We don't want to trade anything that is not the highest probability trade setups. We don't take trades. And another thing that's very important is our objective in the room is not to make trades. Our objective is to make money. We take trades to make money, but you don't trade just to trade. And a lot of people, that sounds crazy, I know, but a lot of traders will sit at their computer, and if they've been sitting there staring at the screen for an hour and a half and they haven't made a trade, they basically get antsy. They get bored. They just get anxious, and they go ahead and put a trade on. It may not be the best, but they'll say, this looks okay. You just bleed all your money doing that. So every alerted trade is going to include the stock symbol, obviously, the strike price of this option we're taking, the option expiration date, and the price to pay for an option. And it may say $1 to $1.05 or something like that, but that would be what comes out. And when the initial alert comes out, it may or may not have a sell price on there. A lot of times I'll send the alert out, get into the trade, and then I'll watch the price action before I actually put a sell price on there. But once you get another alert with the exit price, you want to put that in as good till cancel, so that it would be working the next day when the market opens in the morning. So I'll always put your trades in as GTC, and if we want to adjust the trade the next morning, you would get an alert before the market opens to tell you to change the sell price on that. A question here from Ben: how do I overcome the pattern day trading rules? And the pattern day trading rules, obviously, that if you're not familiar with that, it allows you to make 3 intraday trades that open and close the same day. Only 3 trades every 5 rolling days. So there's a problem if you are trying to do an awful lot of trades. What I will tell you is a lot of the trades that we take won't be intraday trades. They're going to be held overnight. And also, anytime we do a time spread, and we do a lot of time spreads and earnings, those are all overnight. We don't take them till the afternoon, and they don't close until the next day. So any time spreads would be overnight. Any put credit spreads that we do would also obviously be multiple days. And a lot of the trades are going to be overnight. Now, I will say this about intraday trades. When I take a trade, for me to take a trade long, for example, I look at the 5-minute chart, it looks good. I start with the daily chart. I look at the daily chart, and if the daily chart is bullish and the 5-minute chart is bullish, then I'm okay to take the trade. If I have a bearish daily chart and a bullish 5-minute chart, I'm not going to take the trade. Every trade we take is going to have the daily chart and the 5-minute chart aligning as far as the direction of the stock is concerned. Now, why is this important? Well, it's important for a couple of reasons. One, I can stay in the trade longer. If I get a pullback in the stock and the daily chart is still bullish, I can stay in the trade. I can hold it the rest of the day, or I can hold it overnight if I need to. If I had the daily chart not in agreement with the 5-minute chart, I can't do that. Now, as far as pattern day trading rules, why this is important: if you get into a day trade and you can't close it out because you're up against your PDT rule, then the fact that I took this trade and it's got a strong daily chart means that you can hold that overnight, and it's still going to be, for example, bullish or bearish depending on the daily chart. You can hold it overnight and take it off the next day, most likely, and you actually may make more money doing that. I mean, I have that happen all the time when we get out and take a couple dollar profit, and somebody will stay in the overnight and take, you know, $2.50 or $3 per option contract profit. So that's important to know, that when the trade comes to you, it's going to have a daily chart that matches the direction of the trade we took. So if you're getting calls, that daily trade, you can actually stay in. So that's one way, Ben, that we take care of that. Okay, so there's what you're going to get. And again, is trade the best and skip the rest. You know, how do we achieve these stunning results? Well, I've kind of covered this already. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. So we only take trades, well, we take the best trades when both of these are in our favor, allowing us to align our trades with the institutions in the market. Very, very important. We've got to be trading when the institutions. Now, if the market internals are not with us, in other words, if they're neutral, I'm never going to take a stock long if I've got negative market internals or bearish market internals. But neutral or bullish, then, and the compass system is bullish, that I have institutions in there, then we'll go long. So that's how we get these stunning results, because we're only trading the very highest probability trade setups. And we have other criteria that we use. You know, we use trading in the direction of the market. If the market's having a bullish day and it's moving to the upside consistently, what would be called a trend day, then we're going to be trading long. If it's choppy, then we're going to be looking for the best and best longs and best shorts, and we can trade either one of those on a choppy day. All right, so the compass system now is identifying stocks that are being moved by institutional buying or selling. Okay, it also identifies stocks that did not have institutional buying or selling moving them, so they can be avoided. And that's really important. Listen, staying out of a trade is a lot of times more important than having a winning trade. If you can avoid the losers, it's going to make a huge difference in your ROI and in your profitability. Now, the dominator system is looking at market internals, and it's producing buy or sell signals when the difference in the number of stocks moving up on up volume and upticks versus a number of stocks moving down on down volume and down ticks is very large. So if I've got 800 stocks moving up on up volume and upticks, it's not saying anything about the price, but they're moving up, and I've got 200 stocks or 100 stocks moving down on down volume and down ticks, then I have a big disparity of number of stocks moving up. So there's a lot more stocks that are being bought than being sold, and that's going to give me a buy signal. If they're around the same, if you got like 400, 300, or 500, 400, then it's going to be neutral. We're not going to have any signal, and then we rely on the compass system. So these are the two pieces of software. The reason I'm going through all of this is because I know a lot of people just want to get the alert service, and all they really care about is getting an alert and taking the trade. Okay, we want to make money. I give you the alert, and they don't care where the stocks are coming from. But a lot of people, I know, I would want to know, where are these trades coming from that are coming in the alert service? How are you finding these? What makes these high probability trade setups? So what I'm trying to do is make sure you understand where these trades are coming from. Why are they high probability trades? And I'm going to show you these on some charts. Now, how does the compass system, just so you know in more detail, how does it identify when institutions are creating a trend? We do what's called a triple screen assessment. Now, that's a fancy way of saying we look at multi-time frames. It's a fractal comparison here. So we're looking at multi-time frame assessments of four things. The momentum of a stock. We're looking at what the momentum is, and if the stock is going up on momentum on 3 different time frames, then it's likely that the institutions are driving it up. If it's also going up, the trend is also up across multiple time frames, and the momentum is going up on multiple time frames, now the likelihood of the institutions driving this trade goes up even higher. And then when you look at the money flow, the third thing, when all three of these are giving you the fact that something is bullish, that the institutions are almost always driving these. And then we add one other thing, which is called the quant. And these are related instruments. And this is looking at, if, for example, you have Microsoft as the top stock that you're taking. If you have Microsoft as the stock you're taking, the quant looks at other stocks that trade with Microsoft 70% of the time or more. And in other words, if Microsoft goes up, these other stocks that at least move with Microsoft 70% of the time or more, it's going to look at all of those instruments. And if those are also moving with Microsoft across 3 different time frames, the quants on the 3 different time frames, all the same, then you've got a massive likelihood that this is institutional trading. It's massively high, and not, you know, I won't say 100%, but it's probably 98, 99%. So that's what the Compass system finds, and that's how we find when the institutions are creating a trend. And you don't get this all the time. I mean, this is we're looking for this particular situation, and the Compass system, as I'll show you in a minute, identifies these for me. And the Dominator system, which we call new, but it's now a year old, it's looking at the market internals across 5 different indexes. It's looking across the Dow, the New York Stock Exchange, triple Qs, NASDAQ, the SPY, S&P 500, and the Russell 2000. And it's looking at the market internals for each one of those indexes. And then it's analyzing the number of stocks moving up on up volume and upticks versus number of stocks moving down on down volume and downticks in each one of those indexes. And then in the entirety of all 5 of those indexes. So again, when there's a large disparity, 500 moving up, 1 moving down, the software is going to create a buy signal or a sell signal. And again, I use it in conjunction with the Compass system to identify even higher probability trade setups. So that's how we find these high probability trades. So I'm going to show you some charts of recent trades, and I want to show you what the Compass system looks like. Again, if you're just getting the alerts and you don't care about that, that's fine. But a lot of people actually want to know this, and a lot of people buy the Compass system and or the Dominator system to actually help them become successful traders. It's what I use in the room every day. All right, so this is what you're looking at right here is the Compass system on Thinkorswim. This is a Thinkorswim platform that this sits on. Now, you don't have to trade off of Thinkorswim, but the Compass system will go on there, and it doesn't cost you anything to have a Thinkorswim platform to put the Compass system on. I don't trade on Thinkorswim, but this is my screen setup in the room in the morning. So this was for Dollar Tree. This is what we just talked about. This is the daily chart for Dollar Tree. Now what we're looking at here is we're looking at the things we just talked about. This line right here is really important. This is the multi-time frame momentum, all right here. And this is the current time frame momentum. So if I'm looking at a daily chart, this is telling me there's a lot of selling going on the daily. This tells me there's a lot of selling going on the 1-day, 3-day, and 9-day. It's looking across all 3 of those time frames to tell me that there's tremendous selling going on Dollar Tree. And this is the quant line right here. And this is telling me that the stocks that trade with Dollar Tree, most likely other retail stores, is also going down. So it's very easy for a person who has this to see that the stock is bearish, that the institutions are selling this off on a daily time frame. So when we saw this on this Dollar Tree on this daily time frame, this is where we took the trade. And you notice that it's kind of compressing here. This Compass system puts out what's called a dynamic compression zone. You see this shaded area right here. So it's identifying a compression zone, and when the stock breaks below that compression zone, then it becomes a good sell for buying a put. And that's what we did right here. We bought Dollar Tree for a put on this right here, and took it down. We actually just stayed in during the day and then get out. But I want you to see how easy this is to see that this is a bearish setup. The institutions are selling this. It's obvious they're selling this thing. I mean, they're screaming at you to sell this. So that's what the Compass system looks like. There's other indicators in here that I'm not going to go into a lot of detail about, but there's like, this is the 15 EMA of an EMA, a trending 15, which shows you what the trend is. But for what you see here, you just want to know, is this bearish or is it bullish? This is bearish, the institutions are selling. All right, so this is the Datadog, a D-Dog. This is another one we took, and we took this overnight for 2 days. All right, and I want you to notice that, again, this is a daily chart. You notice that the multi-time frame, this is multi-time frame momentum right here. Multi-time frame momentum, we would go in yellow, blue, yellow, blue. Now, I didn't neglect to say that yellow and red is bearish, and green and blue is bullish. So you want these to line up. In this case, you want them either be yellow or red. Yellow and red are both bearish. So as long as it's yellow or red, it's bearish. If it's green or blue, it's bullish. And so you can see we've moved on the daily chart here, we've moved to red on the current time frame momentum, and we've moved to yellow on the multi-time frame momentum. And what we did was, if you see this dynamic compression zone right here, this is where we bought it. As it broke out of the dynamic compression zone right here, and everything was either yellow or red, up and down. We get in short, and we we got in here actually, and get out here, and took a nice profit in Datadog. We had to wait. It went against us one day a little bit on this little gap up here, but this little move up. But there was no reason for us to get out. The institutions were selling it. We could see that, and we stayed with the trade. All right, so that's what it looked like. And I just kind of want you to see what the compass system looks like. And this is one of the elements I'm using to find these high probability trades. This is crowd trade we took. Again, we talk about the colors down here. Now this crowd trade we took, we actually just took it for a day trade, and we did it right here. We had this turn green and then this turned blue right here. So we took it right here as everything went green, and we just took it during the day and get out. But you can see that the multi-time frame is going back and forth. The quants are green, and this is green, and then this went blue. That told us we could take that day, and we did. And it moved up nicely. We got a really nice gain out of crowd. Amazon, the same thing. You can see it's become very bullish. You see it moving along here, and it becomes extremely bullish right here. The quants are yellow, but the multi-time frame and current time frame are both green. And this tells me that I'd be interested in buying Amazon right here. And even though the quants are yellow, that means other stocks that are trading with Amazon, other tech stocks are not all moving in the same direction. But Amazon has such a nice setup here that with this pop out of this is what's called a pop out of the box symbol or a pop signal. This tells you that it's breaking out of compression here and here. And when it went to green on the 5-minute chart, this is a 5-minute chart. When it went green here on this 5-minute chart, this is where we took the trade right here, right off the 15 with a pop out of the box symbol, telling us that the stock is a buy. The institutions are buying it for the most part. Some of the other tech stocks are not going with it, but the institutions are buying the heck out of this thing, and we just rode this thing up, and we get out right about here, I think, when it started to flatten out a little bit. Probably could have stayed in a little longer, but that was a pretty nice win. But these pop out of the box symbols are telling us that a stock is breaking out of compression. See the compression pop? There's another compression pop. When you get those kind of indicators, that gives you a nice entry into the trade. So, and again, you're looking for entries off of a support level, for example, this 15 EMA. All right, so that's Amazon. This is ENPH. This is a bearish trade. Now, it's pretty easy to see here. Again, this is a 5-minute chart. So we're looking to take ENPH short. You see it's compressing here. This is like 10:15, 10:30. This is a 5-minute chart. It's compressing here. You see we get a pop out of the box signal right here to the downside as it's coming off the 15 EMA, and everything's red. We know that the institutions are selling the heck out of this thing. These are basically screaming at you that the institutions are selling the stock. And don't go long, for goodness sakes. And this is a place to take a put. And we took a put on the NPH right here, and we wrote it down, and it stayed red for quite a long time. It didn't make a big drop, but it dropped nicely. It dropped about 2.5 points. So it gave us a nice profit in our options. And once it starts to flatten out like this, we took profits. And once this goes back to blue and then yellow, then blue, this is showing choppiness. Institutions are in and out. They're not selling the heck out of it like they were here. So that's how we found that, and that's how we took that trade. Again, I have to spend time looking for these to find these particular setups. Disney, another short. Okay, this is a 5-minute chart on Disney. Again, are the institutions selling? They sure are. Look at this right here at 10 o'clock. This pink line, by the way, is called the VWAP, the volume weighted average price. It's very important. The institutions follow this thing all the time. The institutions you should not be buying anything that's above the VWAP. Selling anything that's above the VWAP and buying anything that's below the VWAP. So when it's below the VWAP, you want to be selling. You've got red across the board. You've got a VWAP line right here where it's breaking down. You get a pop out of the box signal here and here. This is where we bought it. Now notice that it just compresses. It just compresses. It's not really going down. The institutions are selling it, but it's not really going down. And then you get this two nice drop right here. And this is where we actually get out right here when it popped down like that. Could have stayed in a little bit longer. It stayed red the whole way until you get over here. But again, once you're in a trade, even if it's going against you a little bit or going sideways, but compass system is telling you the institutions are still selling the heck out of this thing, you can stay short. You know, it really tells you when to get in, when to not, when to stay in, when to get out. Verizon, same thing. This is one we took recently. Again, all red. Easy to see, right? Easy to see how bearish the institutions are on this. It gapped down in the morning. This was the open, and we just wait for it to compress, and then wait right here, a little after 10 o'clock, we get a pop out of the box symbol right below the VWAP. See how it's riding the VWAP? So you take it short right here. We know we can go short. We can see the institutions are selling the heck out of this thing, and it drops down. We keep getting pop out of the box symbols, and we stayed in this for a ways down. Verizon isn't something that moves an awful lot, but the options are also very tightly spread and very inexpensive. So you can get into a Verizon. I think we get in for like 45 cents for the put, and I think we get out for 65 cents on the put. Well, that's 20 cents on 40. That's almost 50% gain on the stock like that. So that was really a pretty nice gain. I think we made like 44% on it. So that's a nice little drop right there. And again, you can see it's staying below the VWAP, the 15 sloping down. Institutions are selling. They're screaming at you that they're selling this stock. UPST, this was a long. I'm trying to give you a little flavor of longs and shorts. This is a 5-minute stock on UPST. And you can see right here from the go that the institutions are buying this thing. Now it's not really moving an awful lot, but you see this 15 EMA right here, it's kind of sloping up. So basically what you do is you look to try to find a place where you can take a trade on this thing, which anywhere along here would have been okay. This is where we took it when it came off of the 15 with a pop out of the box symbol after this compression. We bought it here and rode this up. We actually stayed in it longer than this. I wasn't able to copy the whole chart, but that's the trade we took. And again, you can see institutions are all buying this. There is no question about it. You know, you don't have any doubt about what the institutions are doing here. So you can feel confident about that trade in the end working for you. This is UPST as well. I don't even know why I have this one here, but it's basically it's the same type of thing. I think I used Heikin-Achi candles on this to show you Heikin-Achi candles, just to show you what a Heikin-Achi candle is. What we look for is we look for a Heikin-Achi candle to confirm a reversal. When you get a candle like this with a wick and a tail on Heikin-Achi, and then you go to a flat bottom and a flat bottom and a flat bottom, that's a Heikin-Achi reversal confirming the upside move, and then you can get in there off the Heikin-Achi candle. And I have a if you get the service or come into the room, you'll get a video on Heikin-Achi and how we use them. All right, so that's the Heikin-Achi setup right there on UPST. You see, you got a question here. In these examples, it looks like stock movement is less than $1. How do you make money? Options on the move of less than $1. Well, Ben, I just mentioned on Verizon. Verizon doesn't move very much. Verizon, it moved in our particular case, it moved 25 cents. We get in at 45 cents and we get out at 65 cents. That's a 20 cent move, and a stock only moved 25 cents. That's how you make money on your options. I mean, if you have a stock like Tesla or something, that's a different story. It can move $2, $3, $4, $5, $6. But a stock like Verizon, if its ATR is only $1 or less, and it moves 30 or 40 cents, you're going to make really good money on that. Steve says on Verizon, if your cost was 50 cents, am I buying 4,000 contracts? Well, 50 cents is $50, all right? So 10 contracts is $500, so I'd be buying 40 contracts to do 2,000, not 400, because each contract is 10 times the 50 cents. If you're looking at options, when you say the price of an option is 45 cents, that's 400. All right, so is the contracts. All right, so here's Meta. This was a nice one. We took this Meta trade. This is where we took it. This is a daily chart of Meta. This is where we took it. And I mentioned this before. You see how the institutions are really buying. And you could have bought here anywhere along here, but you're really trying to find a place where you're going to likely get some sort of a movement relatively quickly, so you're not sitting in this thing for a week. And this is where we took it. As it came out of the dynamic compression zone right here with everything green. This is where we took it. We took it overnight right here, out of this candle, and we get out the next day right here on that nice little pop. It was just a one overnight trade right there on that pop coming out of dynamic compression. and institutions are obviously all buying this thing. All right, here's this. This is a SPY trade right here. Now this is, I mentioned the SPY super system. This is the SPY super system setup. I'm going to show you the SPY setup on the Compass and on the Dominator here in a second, because that's how we find a SPY super system. The SPY has to be set up on with institutions buying or selling it, and the market internals also have to be either with a buy signal or a sell signal. So this was a sell signal, a SPY super system sell setup. And the reason you see it's below the VWAP, you see how red everything is here. See how it came off the 15 right here with a pop out of the box signal coming out of compression, and everything's bearish. So we know the Compass system is in our favor here for a SPY super system. So this would be where we would buy puts, for example, on the SPY. Right? And again, most of these SPY trades don't last very long. So this is, we call this out in the room. But this was the entry here for the SPY. Now let's quick look at the Dominator system. All right, so here's the Dominator system. Again, this is the SPY super system setup. Here we are here, right here, and here we are right here. And you see how this is compressing here and then breaking down. This was the entry level right here, right? That we get in on the Compass system. And now the Dominator system is telling us we're also got selling. This is right here are the indexes that the 5 different indexes that it's looking at for market internals. And I know this is a lot of information, but just so you can see how they're almost all red. So we know that the institutions are selling because we saw it on the Compass system. And here we know the market is also bearish in our favor. Market internals are heavily in our favor. So you got this setup and this setup. When I see them both like that, I have these both up on my room at the same time on my computer system at the same time. When I see this, then I go ahead and do a SPY super system setup. And there's the trade you got. And you got in right here, right at about 410, and it pulled right down here. And once I get a green candle, I get out and just take profits on this thing. And on the SPY, that was about a buck on the SPY, which is a pretty big move in the SPY in a quick period of time like that. A nice profit. Again, a lot of times you're only going to make 30, 40, 50 cents on the contract, but again, that's 50 bucks a contract, which is pretty nice. So that's the SPY super system. Am I going to replay this? Yeah, you'll get a recording of this. Yeah, we'll talk about the how to avoid the day trading rules in just a minute. Again, what I said was when I put a trade out, it's going to have the 5-minute and the daily chart are going to be aligned. So if you take a long intraday and you can't close it that day because you're under PDT, under the PDT rules, it doesn't allow you to close another trade, so you have to hold it overnight. The fact that I took that trade means that the daily chart is also bullish, which means it's okay to hold it overnight. And so you'll have less likelihood of having a problem with an overnight trade because the daily chart is so strong. Okay, so that's how we do it. Right here, so this is a Netflix trade, and I'm just I know I'm showing you a lot of these, but I want you to see how I'm finding these trades. These obviously took me a while to find, but here's a Netflix trade. You see how it's coming along the VWAP right here. Everything's bearish. We're getting a little bit of mixed colors here, but then right here I get a pop out of the box signal to the downside, and that's where I get in. And you see this was yellow. This went from blue to yellow, saying, okay, the selling is back again. So I get in here and I ride this thing down, and everything stays red. Institutions are selling, and I get out right here and 20% profit on that. That's 10:30 to about 11:35, about an hour and 5 minutes on a trade like that. But it's a high probability trade because the institutions are selling, the stock is bearish. We're getting a compression break to the downside. Very high probability setup. This was a SPY trade, and this was taken directly off the Compass, off the Dominator system. This is just off of market internals. As you can see, the market, it all went red here. We got getting sell signals here. It's below the 15. This is the 15. The background on the Dominator tells us the multi-time frame trend. This tells us what the trend is in the SPY that we're looking at here. Dark pink tells me that the trend is bearish. So I've got a bearish trend with a sell signal on the Dominator system. I also had a sell signal on the Compass system. This is where it took a SPY trade right here. And then this probably was another SPY super system trade. Take it right here and then just ride this thing down. And 3-point gain, $250 per contract. So again, 5 contracts was about $1,250 on the SPY system. And you get out right here. Once you start getting these green candles and these small little candles down here, obviously the momentum is fading. You get out. This was a Tesla for a nice 30% profit, and I'm just keep showing you these so you can see again. It's blue here, and now it goes to a yellow. Here comes the institution starting to sell again. Here comes the selling right when this pop out of the box symbol occurs. This isn't a coincidence. It's breaking out of compression to the downside because the institutions are now selling. Right, to go from buying or not neutral to selling right here, and everything else was already yellow. So this is where the institutions are driving it down. So you take the trade right here off this 15 EMA, right off a perfect resistance level, and we just ride this thing down, and that's the 4 o'clock right there. That's the end of the day. That's when we get out for a 30% profit in Tesla from basically 4:30 or 2:30 till about 4. Pretty easy to see. And this is just so you can see where I'm getting these trades from. When you get an alert, and you go in and you take a look at the stock, you're going to see the same kind of information, the same thing that I'm looking at right here. All right, this was another Tesla trade. Now this was when we took overnight. This was a little riskier. Tesla was bearish. You can see it ended the day with a pop out of the box to the downside. We had red and yellow across the board. So we anticipated, and that's not always a good thing to do, but we anticipated a gap down in it, and we took it overnight from Monday. It fell from 120 when we get into the trade and went down to 112 overnight, and those split puts exploded like $6.50 or $7 a contract on that. And we actually stayed in it as long as it stayed below the VWAP. We stayed in it. It broke down here again, and we stayed in it right to here. And I think at that point in time we just wanted to take the money, but that's Tesla right there. A question here from Steve. In the trade room, do you have both the compass and dominated systems displayed for people in the room to see, using mostly the 5-minute time frames? I do use mostly the time frame at 5-minute time frames. I don't keep the dominated system on the screen. It's just too much real estate. I keep it up on another one of my screens, but I'm always telling everybody what the status is on the dominated system, and most of the time it's neutral. But I'll tell you if we're getting buy or sell signals. That's what really matters. And I do focus on the 5-minute time frame. I don't use anything. I don't use 1 minutes. You can use 15s and things, but I use 5 minutes and I use dailies. Those are the time frames I use. What's the histogram orange spike? I'm not sure. Maybe this one right here. This is a symbol that gets put out right here when these. This is another indicator I didn't tell you about. This is a trend dots. When the trend dots right here cross below the 15 EMA or cross above the 15 EMA, you get one of these. I don't really use it that much. I'm much more inclined to use this pop out of the box symbol. All right, so here's a trade in Zillow. Again, pop out of the box symbol, everything red. Take it as it compresses out of compression. Take it right here, and this didn't really move an awful lot. You can see that it didn't move an awful lot. This was we probably made 10 or 15 dollars per contract on this. It wasn't a very big move, but it was a high probability setup. I'm just trying to intersperse some of these questions here. And does the volume correlate to the pop out of the? Do we expect increased volume? Volume itself does not indicate institutions. A lot of times you're going to see when you get a pop out of the box signal, you are going to see increased volume, but it's not necessarily true. In other words, you can't just use volume increases to identify institutions. It's not enough because you've got to see it across multiple time frames. You've got to see momentum and trend as well across multiple time frames. But if you look at the volume on these, I don't look at the volume on these, but if you look at the volume on these, they're most likely going to show an increase in volume. But you can't use that as a criteria, not by itself. Here's Oxy. This was obviously a huge move here on a big pop here when energy was getting strong. We saw this on the daily chart, and we took it intraday trade on Oxy. This was the candle we were seeing right here forming. This was the intraday trade. The 5-minute candle, here's a daily chart, 5-minute chart, everything buying. Instant, here comes the pop out of the box 77 signal right here off the 15. We bought it here and we rode it right up until here. And that was a pretty nice run on that, about $2.50. The stock moved about $2.50. This is Tesla. The reason I put this up here is I wanted to show you what Heikin-Achi candles look like and how they can help you. Heikin-Achi candles, and I have a video on these, basically each candle is made up of 2 candles. What you're looking for is you're looking for candlesticks with wicks and tails going to flat bottoms. Bullish candlesticks in Heikin-Achi will always have flat bottoms like this. See how every one of these candles has a flat bottom, no tails. That's because it's taking 2 candles to create these. When you have that kind of a setup, that is a bullish, that's a bullish Heikin-Achi reversal right there. You get in right there and you just ride this until you start getting tails again right here and you get out. And that was a pretty big run in Tesla right here. This is a 5-minute chart. This price down here was about 880 and it ran up to 894. I didn't hold it that long, but that's what the Heikin-Achi candles do for you. I just wanted to show an example of that. And again, here's a SPY off the compass system, 5-minute chart, pop out of the box symbol right here, stock coming down, breaking below the VWAP, the pink line, breaking below the VWAP. We went from blue to yellow. Institutions are selling. Here comes the institutions selling. They're yelling at you to sell. And you take it, you don't have to hesitate, you take it, you write it down, it flattens out, you take the profits and you get out. You see how it went back to blue down here. And once you get this kind of lack of momentum, you go ahead and start exiting the trade. But that's what this compass system is telling you to do right here. It's telling you that the institutions are in there. Meta, another big one we had to the downside here. See, pop out of the box signal right here. I'm sorry, a dynamic compression zone, shaded area, breaking down, coming down through that. All right, so that's what we look for there on Meta. We just took that one, and here's crowd, another short in crowd. Again, dynamic compression zone right here, the shaded area, breaks below it, down it comes. And this is a daily chart. I don't use the VWAP on the daily chart. It shows on the chart, but I only use this VWAP in the 5-minute. So it's coming down, and we didn't stay in it all the way down here. We took it here, and I think we get out here or here. Nice profit on that. You can see that everything went from, you see this green to yellow, green to yellow. That's a indication that they're going from, institutions are going from buying to selling. It tips you off. You can use this on a 5-minute chart as well. When it goes from a green to a yellow or from a green to a red, you can use that as a very good entry point to go short if the stock is set up short for the day. And I go over that in the room. IBM, another nice move here. Again, dynamic compression zone, popping out of dynamic compression zone. Everything is green. Go to the upside, and there's your nice move at IBM for a nice overnight trade right there. And this one I want to show you QSR, just so how I use the dominator and the compass system together to be able to align to get the trades in one. So here's QSR in a daily chart. Remember, I told you I start all my analysis with the daily chart. So is it bullish? It certainly is. We've got green across the board. The institutions are all in here buying. All right, so it's popping up pretty nicely right here. All right, so do I want to trade this intraday? Yeah, I do. I want to trade it intraday. It looks good. What's the intraday look like? Well, I'm not just going to jump into the trade. I want to wait till I see what the institutions are doing. And you can see we're getting buying, selling, buying, selling. And now I get a pop out of the box symbol right here, coming off the 15 EMA above the VWAP. This tells me that the institutions are, I know they're in there, and I can see I'm getting movement to the upside. And this is where I can take QSR and I ride it right up until I started getting these the lack of momentum right here and get out right there. And you can see it went back to yellow right here. I rode it through the whole, pretty much the whole green area of the current time frame momentum. That's QSR. Now, there's QSR in there is the daily, bullish. There it is in the 5-minute, bullish. Here it is on the dominator system. Dark green background, bullish. Buy signals up here, bullish. So, and I actually took it right here on the compass system because the compass system was giving me buy signals right here, and the dominator was not giving me any sell signals, but it was neutral right here. And so I anticipate that it was probably going to go to buy since the compass system was getting so strong. And I bought it right here. But if you were more conservative, you could have waited until you got the buy signal on the QSR, on the dominator system as well. I didn't. I took it right here. Just so you can see how these were aligning. And a couple more, just this is a short to the SPY. Again, you see the sell signal right there, and the pink background, it's bearish. You write it down. You don't hang it around in these SPY trades long. 3 candles down, boom, you're out. And this is another SPY trade to the upside. Again, you can see all the buy signals. And this is the dark green. Dark green here is telling you this very bullish momentum. Normally, I would wait till that gets dark blue green like this, but this looks blue to me, but this is actually light green. And you can buy it right here, or you can buy it anyway. You can see the buy signals just keep coming. And this is an interesting setup right here. You see how this thing's pulled back, but everything is telling us to buy here. This is retail traders such as ourselves trying to pick tops. They're trying to pick the top of this stock by selling it. This is what's causing this move to the downside. You see, you get a little bit of red here. Is some of the number of stocks moving down, not institutional wise, but number of stocks moving down. And so this is where the retail traders are trying to get smart. They think they're going to pick the top, they're going to write it down, and boom, back up it goes again. And of course they get destroyed trying to do that, which is what happens to retail traders when they try to outguess the institutions, or if they don't know what the institutions are doing. You understand? We have the tools that most retail traders, 99% of retail traders don't have. We have a system to tell us what the institutions are doing. Most retail traders, almost all, don't have that. That gives us a huge edge over these other retail traders. And who are we taking money from? Not the institutions. We're taking it from the other retail traders. And here's the Netflix, same thing. Again, just kind of want you to see, we've got a dark green background. This is a very bullish setup. You can take it out of any compression move right here. And this just keep getting buy signals. You could have stayed in this thing basically for 2 hours. And another one's a SPY. Again, these are just so you can see what I'm seeing and what the system does. Black background on the dominator system means no multi-time frame trend. Light pink, slightly bearish. Dark pink, very bearish. You can see it's getting bearish, bearish, bearish. It all turned to red here. And so you could get in here. You could get in right here, or you could get in right here and just write it down. And then once you start getting the green coming popping over here again, you get out. But you could take it down at least for this level right here. And another SPY trade. This is the compass system on the SPY again. Are the institutions buying or selling the SPY? Obviously, they're buying the SPY. Right here, they started buying the SPY right here at 1445, 245. It went from yellow to green on the multi-time frame, and the current time frame was already green. There's your pop out of the box signal. There's your run up right to the end of the day. And a nice little trade on the SPY, about 2 points. And same thing here on the SPY. We're looking at exactly the same thing here on the dominator system, right? So here's the SPY compass, green, SPY dominator, dark green. This is a SPY super system setup right there. You can buy it right there in any of these buy signals and write it right up. And again, that's the end of the day. That's the same time frame as the compass system, and they're both aligned. And you've got buy signals. The SPY super system, perfect trade for long the SPY. All right, so again, I want to just kind of go over what we've talked about a little bit. We talked about how I find these trades. We talked about the compass system, the dominator system, how we identify, most importantly, what the institutions are doing. This is extremely critical. And the compass system, if you want the compass system, you can get it. If you want the dominator system, you can get it. You know, they're obviously, you can invest in those. If you just want the alert service, you at least now know where those alerts are coming from. How am I finding these stocks that you're seeing? Now, if you go back in your chart and look, it may make more sense to you. So again, we'll be doing a lot of straight calls and straight puts. We're short Pfizer right now in the alert service and in the room. We'll be doing debit spreads using weekly options expiration. We'll be doing some calendar spreads, or what we call time spreads, over earnings. This will be happening in October when earnings start to ramp up. We'll also use some weekly ATM strategies to capture premium every week. This will happen when the market becomes neutral to bullish. It's certainly not bullish on Newton right now. It's coming down pretty hard. And then the SPY super system, this will be in the options room. This will not be on the alert service. You won't get these in the alert service. But if you have the compass system and the dominator system, you now know how to take those trades. You know what to look for. Basically, what I've done is giving you my strategies and how we use these things. All right, so this is the offer that we have. We call it the fall special. This is for the alert service itself, just for the alert service. It's $9.97 a year for the alerts, and again, how many we get, I don't know. It's going to be in the neighborhood of 20 to 45 a month. It just depends on how many high probability trade setups there are. So I don't tell anybody how that you're guaranteed any particular number of trades. I just tell you that when you get it, it's a high probability trade setup. So $9.97 a year, $2.97 a quarter. And the trades will come, of course, by SMS or text alert. For the first 10 people to sign up today, you'll also get access to my room for a month for free. You'll also get the masterclass series, which is all the videos I've got. And again, the videos are on the compass system and its indicators and how to use them. The dominator and its indicator and how to use them. How to find highest probability trade setups. I have another one called Top Gun, which goes into using additional technical analysis over and above the compass system to find even the best of the best trades. That's why it's called Top Gun, best of the best. And you'll learn the secret ingredients to my winning trades. I laugh, but it is, listen, these strategies work. They've been working for a long time. If you want the compass system, your compass system, the investment is only $9.97 annually. And for the first 10, you'll get a market scanner for a year with new scans. I've got a bunch of new scans that I've got in there now, and some more coming for the compass system that will scan stocks and show particular setups, like pop out of the box symbols and things like that. You'll get live trading room access for a month, and you'll get, again, the masterclass series, just like we talked about in the alert service. And finally, if you want to buy the compass system and the dominator system together, $14.97. It's only $500. Yeah, $500 for the dominator system, which is a steal for both the compass and dominator system together. And again, you get the same things that we talked about just a bit ago. Market scanner for a year with the new scans, live trading room access for a month, and the masterclass series, which is all the training that we have. And those are the three offers we have based on this. I think you've seen the compass system, you've seen the dominator system, you've seen the results that we've gotten from the alert service, how and in the room, how well we've been doing this year. Pretty spectacular results, really. And so those are the three that you get. Now, if there should be a link in the chat box to the yep, there's links in the chat box to those particular offers that we had out here. If you're interested, or perhaps you're not sure, but you'd like to get some more questions answered, you can do a couple things. But you can put your name and phone number or your Skype username in the chat box, and likely Rory, somebody from Brightline, or mostly likely Rory, will call you back to answer your questions. They'll just call you one time. They're not going to pester you to do any of this stuff. We don't do phone solicitations. All of the solicitations are just done through a webinar like this. But if you sign up, if you put your name and phone number in there, you'll be guaranteed the 3 additions to the software package. So you'll get my room for free for a month. You get the scanner with the new scans, and you'll get the masterclass series. All right, so you can put your name and number in there, and they'll get back to you and they'll talk about that. So again, let me just see if we've got any other questions. I think I answered most of the questions during the webinar. Okay, I don't think there's any additional questions. I try to answer them as we went. Usually I wait till the very end, but a lot of times they may be time sensitive to the actual chart that's up there or whatever. So All right, so that's, unless anybody's got any other particular questions, I want to do something here. I'm going to, since I got a couple of seconds, I'm going to go ahead and I'm going to drop this down for a minute, and I'm going to show you this. This is the Compass system on my home computer right here. This is the system that I use, and this, so you had seen the scanner, but this is the scanner. I have a couple of different scans. But the scans I have, this is called cascading down, but this is showing stocks that have three red candles in a row, or 3 green candles in a row. This is cascading down. And if I look at Apple, you see how we had 3 candles. This is one of the scans we have that's looking at a 5-minute period. Then I have another one that shows the pop out of the BOF signals to the upside and to the downside. So it's quite a few scans in here that you get. And then you have like this new yearly highs, which is actually, that's built into Thinkorswim. But this, the scans will come with the software when you get it. And this is what your screen will look like if you get the Compass system. It will look just like mine, exactly the same kind of information we saw there. These are charts from Friday right here. And if you look at Pfizer, I want to show you Pfizer. This is one we took short, and you see it had a little mixed candles, but we were basing it on the daily chart. So here's Pfizer's daily chart right here. See this compression here? See the pop out of the box symbol, and you see the dynamic compressions on it broke down. This is why we took Pfizer short on Friday. Everything's red. The institutions are obviously selling Pfizer. So that's how we took Pfizer short. And UNH was a good long, by the way. UNH long. We took a time spread. No, not time. We took a debit spread on this thing yesterday. This is the long here on UNH. See, they had yellow here still in the multi-time frame, but the current time frame had gone strong to the day side, and we only wanted to trade it for a day. We didn't want to try to hold it overnight, so we didn't. But that was UNH. I think Humana was another one that was pretty decent. Yeah, Humana's got a nice setup here as well. So again, that kind of is the end of the webinar. I don't really have too much else to say unless anybody has got any other questions. I certainly appreciate you taking the time to spend your Saturday here with me, and I hope that you have found this useful. Again, I know I covered a lot, but I think it's important for anybody on the service, the alert service, to know where these trades are coming from. And I know a lot of traders want to get the software. They want to be able to find these trades themselves and become consistently profitable. And this will give you the information you need as far as what the institutions are doing. That's really, really important. So again, thanks everybody. I appreciate your coming to the webinar today and listen to me. I hope you found it very useful, and have a great rest of the weekend.